What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and I want to start this video by saying thank you to everyone that's helped me reach 1,000 subscribers. Let's give ourselves a round of applause. And yeah, we're going to get straight into things. Hopefully you've watched yesterday's video. If you haven't watched any of this week's videos, I highly suggest and counsel you to go watch them, because I'm not going to be going through everything. Yeah, I'm going to work my way from the weekly and work our way down as per usual. So you can see we finally traded up into the implied fair value gap that I had my eye set on up here. Traded right up into that very nicely. And now implied fair value gaps, like I said, ICT doesn't directly teach them, but he's mentioned them once or twice. And hopefully this week you've seen how they work, as in price will trade to these ranges that will act as fair value gaps, even though they don't necessarily look like a clear gap, like here, for example. So now I hope that you know how to identify them and can start applying it to your work. But the fact that we've now reached this premium array, and what I mean by premium is that if we look at the range that we're trading in, we've reached a very high premium. Obviously the midpoint's here. So now we should start looking for discount PD arrays for price to trade to. So that's going to be everything below this 50% level that price may want to start retracing into. Now before I get down to the daily, we do need to remember that tomorrow is FOMC, so we should anticipate a lot of manipulation. Very low risk if you're going to be trading at all, preferably no trading at all. And yeah, just be careful in general, guys, because I tend to stay away from the markets on FOMC. So anyway, you can see there's that weekly implied fair value gap. We traded into this bearish order block right here. Here's the open off it. And then we traded nicely into that, got a nice reaction off it. And we also traded to a 4-hour PD array fair value gap that I drew our attention to in yesterday's video. So if you go and watch yesterday's video, you remember I called out this price precisely right here, and look at that. You can't make this stuff up, guys. So if you missed that video, go check it out. That's going to be the last time I ask you to go watch yesterday's video now. So we traded into that, beautiful reaction off of it, kind of just consolidating now. But let me go back to the daily and we can start looking at what we can start aiming for. So assuming this is a swing, as in we're expecting low prices, I'm going to be looking at yesterday's wick, so this range here, specifically the 50% level, because that's consequent encroachment, and this is going to be pretty much the highest I anticipate price to trade. Now, like I said, it is FOMC tomorrow, so we can anticipate a significant level of manipulation, and price may want to go past this. So in terms of accuracy, just to keep that in mind. But when we drop down to lower time frames, we can look at what lines up with this to potentially look for shorting opportunities on dollar with the expectation to trade lower. We have this huge fair value gap down here to reach for, but first we have the fair value gap that we created today below here. So we have some targets in general to trade to. I'm going to get them marked out for us. So we have this fair value gap, and then there's another fair value gap below that as well. But our first target should obviously be this one. And yeah, let's go down to the 4-hour and get a better look. So you see we came off that 4-hour fair value gap just as anticipated, came back into this range, and like I said, I'm expecting price to want to pull back up one more time and then break lower. So it's going to create like a nice swing. And almost create a mitigation block on this swing low. So again, fair value gap below relative equal lows. You can see that on the 4-hour as well, making it very high probability. And one thing to take note of is there is this huge fair value gap here as well on the 4-hour. So there's a lot of imbalances on the downside that price is going to make its way through. But because this is a daily fair value gap, this is going to be our focus point, as in, although we've got the 4-hour one, we want to see can price reach down into this one. If that's the case, then we can continue hunting for sell stops for the rest of the week, looking at these lows to get taken on potentially Thursday and running into Friday dependent. So yeah, let's go to the 1-hour just to get a better look at price action. And you'll see, again, we've just fell off that swing high. Look at that close, beautiful, traded lower. We have a bearish order block right here, this last up close candle, and you'll see that lines up with the 50% level. Now this is significant because this is where the change in the state of delivery happens. So we can anticipate this range up here to be acting as a selling point. Once we drop down to the lower time frames, we should be able to identify some kind of breaker here as well, which will again allow us to start setting up trade ideas. So let's go to the 15-minute, and you'll see there's a breaker here. We've got a high, a low, a high, and the price is delivered to the downside. So now I'm watching this last down close candle, and when you look at that, it just happens to line up with the 50% of that daily wick I marked out. So you're seeing how all these PD arrays are lining up with each other nicely, and I'm going to be looking at this range to potentially offer me shorts, but I will be waiting for a breaking market structure as in I want to see us turn around at this point. And again, time of day, it goes time and then price, guys. So let's say we reach here about London 3 a.m. then I'll be more comfortable shorting as opposed to some random time anywhere outside of that. Preferably with FOMC, if we're still in like this premium, as in above here, then we can start looking for short again into that daily fair value gap, and we've got some beautiful relative equal lows below here. And now here, let me just get these marked out for us. There's going to be a lot of sell side liquidity residing below here as a target for price, so we'll get that drawn out. But again, I don't know how volatile FOMC is going to be, and we may very well pass through this daily fair value gap and go straight into these relative equal lows. So there are a lot of targets in terms of downside delivery, but as you can see, we're already trading higher, so don't be surprised if there's a lot of manipulation in terms of returning to the premium before we see a significant break. And the reason it's doing that is, again, it's building liquidity for us to eventually grab on the way down. So yeah, that's pretty much what I'm targeting. Another thing I want to bring our attention to, which is quite interesting, is purge and revert. Now this is, ICT has a video called Purge and Revert. I have spoke about this before, but basically a purging is when there's a purge on liquidity. So this large expansion that we witnessed today on Tuesday, I consider that a purging, which means that after the purging, we should look for the next day. We should start looking for the low of this day to get targeted, followed by this low to get targeted. So moving to the new day, basically what I'm going to do is have this low marked out, and I want to see this get targeted at least in the new day, assuming this is a purging of liquidity. So that's what I'm watching moving into the Wednesday. And yeah, it should be interesting to say the least. So that's everything on dollar. Hope that all makes sense. Now let's head over to GBP USD. I'm going to start on the weekly here. And again, you can see how we've traded down into this weekly bullish order block beautifully. And on the daily, you can see price action. So we came down, traded into this fair value gap right here. One thing to take note of is that we traded to 50% level. So price failed to trade into it fully and then came off it a massive amount, whipping right back through the entire range, which was crazy, absolutely crazy day. But just as anticipated, this is a bullish order block as well. You can see we traded down into that, so perfect. So now again, if I'm expecting high prices on dollar, I'm looking at the 50% level of this the same way I am on dollar with the highs. Now let me tell you something. If let's say we trade through this 50% level and start trading lower, then that means I'll simply start looking for us to trade below this low and potentially into these lows. But I want to see us respect this for me to want to be bullish. So that's why I'm just keeping these levels marked out, because as far as I'm concerned, if we're going to trade higher, price should attempt to respect these levels. Another thing, this is an implied fair value gap, and that lines up with this 50% level. So again, because it's an implied fair value gap delivered on the upside, and we traded through it on the downside and upside, because this is a wick, right? We want to see this provide support. So moving into the 4 hour, again, I want to see a retracement back into this range, but I'd like to think that we can find support. So let's just take a deeper look, and you can see we're coming back down into this order block. We've just run out these highs. This is significant. Just taking out these highs. So now we're looking to see, okay, can we see continued support for higher prices? So long as that's shown, then we have this huge 4 hour fair value gap up here to trade up to above these relative equal highs as a beautiful target on pound. So let's just get that buy side liquidity marked out like so. We'll drop down to the hourly, and again, you can see how these order blocks are getting traded through here, and we just took out these highs here. So again, moving into the new day, we have a breaker here. This is the last up close candle before the down move. We can drag that out. I'm going to make this one orange, get rid of that middle line, and this should act as a breaker, because again, we've got a low, high, lower low, and price is broken to the upside. So I want to see this range act as support. There's an implied fair value gap between these two order blocks, so price may want to dip quite deeply into this range, and then I'd like to think it can offer us buys. Again, ideally, that will happen around London session. You'll see that at 2 a.m. we do have some high impact GBP news. So let's say at 3 a.m. we are in this range. That might be an excellent opportunity to start thinking about buys, to run into the relative equal highs that are forming here. And again, like I said, that buy side liquidity and 4 hour imbalance above there, and a breaker. So it's looking very clean in terms of setups. Let me just get these midnight candles marked out. And again, with the purge and revert thing I was talking about, if you want to go and watch the video, just type in ICT purge and revert and it will come up. But assuming this is the purging of price and liquidity, we're looking for this high now to get targeted in the new day at least, and then it'll be this high and then this high. So we can have these levels now marked out on our charts as buy side targets, and then we want to be looking to buy below midnight open with the expectation to run to buy side liquidity. So that's what I'm expecting on pound. If you go to the 15-minute, you can see how these order blocks are stacking inside each other. That's nice to see. So I'm looking now to see, can it provide the support we need, like I said, to trade higher. So yeah, again, this is the lowest price I want to see price go. If we go below here and we start digging deeper back into this range, I will be a little bit more conscious, a little bit more nervous in terms of, you know, not wanting to see that happen. It can do it, and that's why we need to be careful, especially with FOMC and whatnot. So that's just something to take into consideration, but preferably not. But one thing I do want to state is that I don't think this low is going to get left like this. So I'm not saying this is the low of the week, but I am expecting a reversal at this point on the Wednesday, a Wednesday midweek reversal. So that's why I do want to see these highs start to get targeted, and that big buy side liquidity we have from last week. So yeah, it should be very interesting, but it's all just a matter of how we treat this this hourly breaker block, because like I said, if we trade through it, then it's like, wow, we're likely going to come back into this range and potentially trade into these lows, and it's completely different. So something to take into consideration, but definitely have your days marked out and the highs and lows of each day marked out, then we can see our price trades. So finally, last but not least, we're going to go on to Euro. We're going to start on the weekly on Euro. Remember, Euro's now traded into its implied fair value gap. Just tapped into it, and we're coming off of it nicely. If we go to the daily, you'll see how we came off of that. Again, I'm watching the midpoint. I'm watching the midpoint of this wick. See how we trade to it. Again, if we trade through it, so be it. Then I'm going to start looking for these lows and the 50% level of this order block to get traded to. But that's only if we manage to violate this 50% level. So we can get that marked out, so we can see it on the other time frames. Like so. And again, there's an implied fair value gap here as well. And you can see just like pound, it lines up perfectly with that level. So you can see how different PD arrays are overlapping with each other. In terms of buy side targets, you can see we've already traded into this fair value gap on this wick here. And you'll see that this wick rebalanced with this wick. So so these wicks are touched. As far as I'm concerned, this range from this high to this low is traded through. So now I'm looking at this wick this, wick that. We'll get the 50% level of this marked out as a potential upside target. And then we also have this implied fair value gap just below it as well. So we might have a smaller day on Euro. It really depends. But I'm going to get rid of this just so there's less on our screen. Let's go to the 4 hour. And again, we ran out these buy stops below here. You can see we're pulling back into the range. Small fair value gap right here. One thing to take note of though, Euro hasn't taken out this high yet, which is interesting. So I'm waiting to see, because Euro hasn't taken out its high yet, it can trade deeper, as in Euro may want to go even lower and trade into this fair value gap below here. So again, we need to be very careful tomorrow, watching our price trades. If we find support here, brilliant, but don't be surprised if we come down into this level and then start trading higher into relative equal highs and a fair value gap right here. In fact, let's go to dollar real quick. Let me see on dollar. Yeah, I'm expecting a lot of manipulation tomorrow, guys, in general. So just be very wary. But overall on Euro, as much as I want to see this provide support, like I said, the fact that we haven't taken out this high says to me price may want to dip deeper and potentially try and fill this fair value gap, whereas GBP is actually traded through this high, so the chances of it trading deeper than this low is less likely. But we'll see. So that's going to be everything, guys. I hope that all made sense. Very interesting day today. Personally, if I was you guys, I'd just leave tomorrow completely, purely because of FOMC and the amount of manipulation we're going to see. You know, accuracy decreases significantly with events like that. But that's going to be everything, guys. Thanks for watching. Don't forget to smash subscribe. Don't forget to join the Discord. Don't forget to follow me on Instagram. I have a new Instagram at It's GBP Baby. And again, massive thank you for 1,000 subscribers. See you in the next one. Peace.